Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me is Phil Mackintosh, chief economist at Nasdaq, to discuss interest rates, inflation, and getting global debt under control. And Phil, you can see in Monday trade that stocks are responding to a continuous rise in the 10-year. So let's talk about that and the global rise of rates in general.
Yeah, it's true. I mean, you look at the US interest rates and they've been, well, they're almost double where they were at sort of the lows 6 months ago. They've been ticking up pretty strongly in the last month or so with all the talk of the new stimulus and the vaccine starting to distribute through the system, where people weren't talking about inflation that much a couple of months ago because demand was just so weak and we didn't really think it would happen. People are definitely starting to talk about it now. And that means the expectation is the interest rates, at least 10 years from now, will be higher than the current or the expectation a few months ago. So interest rates have been increasing in the US, but also around a lot of other countries in the world.
And that said, inflation is yet to show up in personal expenditures, the Fed's preferred inflation gauge, which is surprising to me because I, for one, have noticed higher prices at the pump and in grocery.
Yeah, and what you've noticed is true, but what we are not including is the fact that none of us are going on holidays, but the airline tickets are cheap and the hotel rooms are cheap. So there's a whole lot of things that have deflated because of a lack of demand, but there's also things that have inflated because of excess demand right now. So the actual consumer prices are averaging around about the middle, which makes it look like there's not that much inflation in the system. But as you said, if you do a deeper dive, there's inflation in the sectors with a lot of demand. There's also inflation in commodities. And for a lot of the inputs going into manufacturing, there's much more inflation than we're seeing in the consumer prices.
Moving along to COVID-19 data, it looks like we're starting to see progress in the US.
Yeah, I mean, it's really significant how well the COVID has been crushed. If you talk about this second wave, we've got hospitalizations falling, deaths falling, new cases falling back below November levels. So a really positive result as the vaccines roll out. There's not enough vaccines out there really to explain the drop that we've had. There's not even as much sort of social distancing to explain the drop that we've had. But it's really positive news for the US. What's interesting is Europe went into some pretty strict quarantines around Christmas time as well, and they saw big drops in their cases. But as they're opening back up, they're starting to see those improvements to stop and almost turn around. So there's quite a few countries in Europe that are actually seeing increasing COVID cases now ahead of them getting their vaccines rolled out.
So finally, we saw a significant decline in short interest in many of the most shorted stocks, which I find very interesting.
Yep, and it's actually a trend that's been going on for quite a while. But obviously, with all of the GameStop and AMC tickers trading hyperactively a few weeks ago, and we talked about them, the shorts were being squeezed, and the data that just came out pretty much confirms that. So the data comes out every 2 weeks, and you get to see the total short interest. And it looks like on a lot of the tickers, there was a significant reduction in short interest, not just those tickers that we mentioned. Market-wide, the amount of short interest seems to have declined pretty significantly, actually.
All right, Phil, appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, global markets reporter at Nasdaq.